Hey everybody, Chris Versace here from Tematica Research, trying something a little different today in terms of the setup. A lot going on, but just wanted to get with you guys to let you know that today is kind of an important day in the markets. Yes, last week we saw the market, whether it's the S&P 500, the NASDAQ composite, continue to chug higher, pushing them, I don't know if you know this, into technically overbought territory based on the relative strength index levels. And a lot of that continued melt up had to do with what we heard from the Fed last week. In case you missed it, what did the Fed say? Well, not only did they deliver a 25 basis point rate cut, but they penciled in one more rate cut for 2025 compared to what they had at their June policy meeting. All we have to do for that is take a look at the updated set of economic projections. But why then is today important? Well, for two reasons. One, at 9:45 a.m. Eastern, we're going to get the flash September PMI. That's the next big economic data snapshot following what the Fed had to say. And it's going to give us a pretty good indication of not only how the economy performed during the month of September, both manufacturing and services. But when we think about that data compared with what we got in August and July, we're going to really start to fine tune expectations for GDP during the September quarter as a whole. Now, as we think about that, we also know that we're on the cusp of the September quarter earnings season. That means companies will be delivering not only their quarterly results, but their updated outlook. For that, we're going to want to pay close attention to what we get in the flash September PMI report on the new order front and on the inflation front. Why new orders? Well, that's going to kind of be a nice indication of demand and set expectations, manufacturing and services again, for what's coming as companies guide for the final quarter of the year. Inflation, why? Well, a few reasons. One, input price increases, output price increases. How are they faring? What does this mean for potential margin pressure, potential incremental pricing action by companies? That's going to help set the tone for what we see as companies update their outlook for the December quarter. But also on the inflation front, we know that it has been running warmer than expected, moving in the wrong direction, call it what you will. And to the extent that we see this continue, that's going to raise some questions about whether or not the Fed will deliver those expected rate cuts in the balance of the year at their October and December policy meetings. Remember that the updated set of economic projections are just that, projections. They're not policy decisions. Every policy, as Fed chair, every policy decision, as Powell likes to say, is data dependent. So we'll want to see what the data has to say today. But after we get that report, we will have some other Fed speakers making their rounds today and later in this week. But today, Fed Chair Powell will be speaking. And this is the first time since last week's policy decision and subsequent Powell press conference. Why is this important? Well, in the past, Powell has either reiterated what the policy decision was, or he's kind of offered a little more sobering context for what the Fed might be thinking about. And sometimes that has the possibility of throwing cold water on the market's initial reaction to the policy decision. So I want to pay very close attention to what he has to say. Candidly, there hasn't been a lot of fresh economic data out so far. But again, we will get that flash September PMI report out at 9:45. Powell speaks a few hours after that. So that could very well set the tone for how we see the market trading this afternoon. It also has the potential to potentially throw a little cold water on the market. Remember that the market, as I said a few minutes ago, was oversold exiting last week. Monday's melt up higher only pushed those RSI levels even further. Now, is overbought necessarily a bad thing? Not necessarily. Stocks can remain overbought for some period of time. Folks tend to talk of it as a condition. However, when we do look at the market, whether it's the S&P 500, the NASDAQ composite, that overbought condition does not last as long as it can for individual stocks. Sometimes something out of the blue can kind of, as we like to say, upset the stock market apple cart, leaving things to pull back. So again, today's going to be a big day. Throughout the balance of the week, though, we will start to get some dribbles of earnings and some other economic data points. But again, I would argue that today is going to be important. I would suggest come back to thematic signals for a couple of reasons later this week. One, I suspect we'll have an update on some models, and we will be sharing the latest round of confirming signals for our targeted exposure and thematic models. Thanks for watching. Have a great day.